you, Studio B. Hello and welcome to Stock Review with me, Trishna Patel. On this edition, JC and I will be looking at stocks covered in corporate profile this past week. JC is from traderstrureveal.com. Thank you, JC, for joining us today.
Thank you, Trish. It's always great to be back here at the studio and looking at some stocks, especially at the last day of the trading for year 2014.
Now, JC, let's have a look at the market this past week. How did it fare?
Now, if you look at the chart that we've seen here, the market has really rebounded. Now, on the insert is the last review that we saw, where we saw the market actually broke down the 1700 level, and everybody is saying the market has gone to the dog. But like it or not, we are trading almost towards the last 2 weeks of 2014 that tend to be very bullish in terms of historically, and yet it came true for this year, 2014. The market completely reversed. Now you could see a very nice bottoming tail or doji, and the market just revert back to the uptrend, breaking back to the 1700 level and still moving higher. Now today is the last day of the so-called 2014 trading. It should be a very bullish day. Market is now doing around 1770. So the question is, how would it fare going forward the 2 weeks of 2015. Now, if history has any play, last year we have a sell-off in the regional, in US Dow Jones as well as in Europe, and that market came off, and that also spread towards to the ASEAN country, and Malaysia was no exceptional. And we also saw a heavy selling the first 2 weeks of 2015, and yet the market did bottom slightly in mid-February before the market recovered. So will we see this complete sell-off that we have seen now, which is bullish, a selling followed by buying? That yet to be seen, but you'll be curious. But as I will review you to next week, what's going to happen on this coming 2 weeks of 2015. That will be interesting to see.
Now, JC, moving on to this week's stocks, UEM Sunrise Berhad. RHB-OSK has downgraded UEM Sunrise from a trading buy to a neutral. The research firm also lowered its target price to RM1.65. It expects financial year 16's earnings growth to be under pressure. The research firm thinks that this slower economic growth is likely to continue dampening the company's property sales, while land sales may also be lacking. Now, JC, can we have a look at your price and volume chart for UEM Sunrise Berhad?
Now, if you look at the UEM Sunrise Berhad, what we just said, which is really true and being reflected on the price and volume chart, which is the ivasachart.com available there, and you can get that for a free trial. We could see there were many red down arrow, which is a sign of weakness. Sign of weakness simply just says that supply are more than demand, and that also reflected on the prices. However, as the market trying to break to 140, that's a bit oversold, and then we could see a line change, which is LC, and the green arrow comes back. So this does mean what? This means that the market is oversold. The market will continue to move sideways first, pending on more news that is coming up. Now remember, next year we will have the GST implementing, so that will have a pending effect. At the same time, property sector like UEM Sunrise has really fallen out of favor, so making it very, very difficult to profit, especially whether with the economic which is slowing in 2015, and also there were many other reasons in the sector too, and also cost of build construction is also putting a squeeze on the margin. So that is reflected on property sector like UEM Sunrise, which we would see a tendency of a biased sideways market.
Now, RHB-OSK also said in a note that the stock could be further derated in view of the slow economic growth ahead, as it is a proxy for Iskandar. The re-rating could come despite UEM Sunrise's efforts to mitigate the downside in new property sales by diversifying overseas. RHB-OSK even advises investors to avoid this stock over the immediate term, given the prevailing negative market sentiment. Now, JC, would you give the same advice to investors, which is to avoid this stock for the time being?
Now, if you're looking for yield, UEM Sunrise may be a good stock to buy by averaging down, but this is not something I recommend. Now, if you look at the upside, the dividend yield is currently about 2.3%, or maybe even higher with the lower prices. But what we have seen from a weekly chart here, the trend is certainly going lower. Now, in any point, right, you don't want to be averaging down. You want to see some sort of accumulation or a stage 1 in the IVSA. That's the only way to down. Never buy a falling knife, because when you buy a falling knife, prices tend to get lower and lower. At one point in time, you wonder whether you have bought the wrong stock. So what we want to do is recommend viewer to actually buy during accumulation. Look for SOS sign or strength, which is demand. Have you seen any so far? Just probably one, which is the bottoming tail, or sometimes we call it as SP. You see it as a spring. So which means this market may bias for a sideways market, but with the continuing economic forecast, which is not that good, we want to see more SOS coming in first before really thinking of buying this UEM Sunrise.
Now moving on to Malaysia Airports Holdings Berhad. MAHB recently won a 192 million ringgit contract from the New Doha International Airport Steering Committee. The contract was awarded to MAHB's joint venture company, Malaysia Airports Consultancy Services Middle East LLC. MAHB has a 49% stake in the joint venture. The contract is for a duration of 3 years and comes with an option to extend for an additional 2 years. Now JC, can we have a look at your price and volume chart for MAHB?
Certainly, Trust. Now you look at the chart we have in here, one of the showstopper, or what we call resistance, is the 50-day moving average, which is, you could see every time when the market try to touch or even break above the 50 moving average, which is, you see the downtrend line currently at 6 ringgit 80 cents, the market could not break higher. Now what does that tell you? It simply tells you, if you are a technical trader like price and volume, you want the price to break above the 50-day moving average before buying. At the current dividend, about 1%, it doesn't make a lot of sense too. And also a relatively low ROE and also heavy on debt. This winning is probably being priced in. But what's really making a Malaysian airport is also what we have seen so far in this year, in 2014. We have the mishap of QZ8501 as well, the MH370 and the MH17. So that is putting a lot of damper that tourists may not be arriving that much. So that's why we are seeing, at best, the market is still supported at 6 ringgit 40 cents in here. If you do see a lot of SOS, perhaps on a longer term, then may be a good buy. But do buy when the market move from accumulation to pure mark up stage, which is a stage 2.
Now, analysts seem to be having mixed reactions to Malaysia Airports. Hong Leong IB and RHB OSK are keeping their buy recommendation on the stock, while Affin Hwang Capital and TA Securities are advising investors to dispose of the shares. Now, JC, what advice would you give to existing shareholders?
Now, if you look at the chart, this is going to be a long-term play. On the long term, since October, the market's moving sideways. Now, there is a potential that it might break below 640 and going even lower. So that's a danger point in. So again, investor, buy when the market is going higher. When it's lower, let it drop. All right? Don't question it. Perhaps you may want to buy at the lower prices. If it drops, let it do. Look for strength before you buy this Malaysia Airport Berhad.
Thanks, JC. Now let's look at forest concession licensee and plantation player Ta'an Holdings Berhad. Public Invest is expecting decent earnings from Ta'an over the next 2 years. The research firm thinks that Ta'an will be backed by encouraging growth of FFB production. It also thinks that decent performance will be supported by higher average CPO prices. The research firm expects Ta'an's timber arm to recover after suffering for the last 3 years. It also sees a more solid balance sheet and better dividend payouts going forward. Now, all of this aside, what does the price and volume chart look like for Ta'an?
Now, from a price and volume chart, now remember, Ta'an is a timber and plantation play. So from there onwards, we have seen CPO prices really came off, because CPO prices are strictly correlated to the crude oil prices. We all know what crude oil prices did when it broke through the $75, and we could see also from the chart in here, Ta'an subsequently break the 3 ringgit 70 cents and go as low as 3 ringgit 20. But since then has rebounded, which is also concurred and correlated with the crude oil prices. Now going forward, this is going to be much a dividend play. There is still a lot of supply of CPO in the market in there. But what is really good about now is because of the rainy season that we see in the monsoon, so yield for CPO will definitely be low. That simply push up the CPO prices higher, as we can see now, which is hovering around 370, 360 ringgit in here.
Now, Public Invest Research is suggesting investors to start accumulating shares in the company. The research firm thinks that Ta'an has at least a 31% potential upside and an attractive dividend yield of 5.5% at current levels. Now, would you advise investors to accumulate on Ta'an, JC?
Now, for long-term investing, that may be quite true in here. As you can see, on a weekly basis, we also have sort of a spring chart, which is the topping tail in here, and further on we have a test. So that's going to be quite good. If the market closes above the 370 or 380, perhaps that will initiate a technical buy with the dividend yield about 2%. That's how I see I will play out for Ta'an Berhad.
Now, we also looked at Kossan Rubber Industries Berhad. In fact, you picked Kossan Rubber as the hot stock of last week. Kossan recently made an announcement that it has acquired a 5.3 hectare freehold industrial land in Klang. AM Research thinks that the newly acquired land will be used for the group's future capacity expansions. Now, before we get any further, can you walk us through your price and volume chart for Kossan Rubber?
Now remember, Kossan was one of the stock pick, you can see. So on the insert that we have was around 460. Now remember, we also have a sell-off immediately in the market is. Now, one thing very important, Kossan is actually a rubber play. Now with the Ebola virus, which is still going on, and the weakening of ringgit, Kossan is actually a good will have some significant good margin for it. So this is actually one of the best sector I would recommend as a bit of growth, especially organic. Now the market has broke back to the so-called 50-day moving average, which is above 460. So that signifies strength in the Kossan stock.
TA Securities is positive on this news as the land acquisition helps support the group's future expansion activities. The research firm also said in its note that this move reaffirms the management's view about the bright prospects in the glove manufacturing industry. Now, JC, what advice would you give to investors to look at regarding investing in a rubber glove stock?
Now, rubber glove stocks is very interesting. First of all, it has an organic growth because the demand for rubber it is. And Malaysia is being one of the largest exporter of rubber glove in here. Kossan also have some nitrate glove in here, so that would definitely help in a bit on the margin side here. But going forward, what will play very well for us is the strengthening of US dollar against ringgit, because Malaysia being an exporter, that would certainly help a lot more. And commodity prices are coming down. So rubber are coming down, ringgit is getting weaker, but margin squeeze will occur definitely for Kossan in here, but it will be good overall in terms of sales.
Now, JC, I understand that you actually have a hot stock for us this week.
Yes, the last stocks that we have for this pick is MYEG. Now, if you look from the stock MYEG, this is a nice trending stock. This is actually a growth story. It has a lot of government projects in here with also the GST. It does has a play in here. Even despite what we had during the sell-off that we have in December, the market have a 2-bar reversal holding above the 50-day moving average around $4 and continuing to push higher. Now, what will be interesting is to see coming to 2015, the first 2 weeks, will MYEG break up? It does certainly look so from the sign of strength that we see on the right side, which is shown by the green arrow. And let's see if price and volume do come in, we will see MYEG breaking above 4 ringgit 50 cents.
Thank you, JC. That's all for this edition. On behalf of JC and myself, happy New Year. Back to you, Studio B.